All right, guys, so we can get started. Everyone can hear me good?
Yes, sir.
All right. All right, so we got this. I created this little watch on the side that might make it a little bit easier for you guys to see the names that I'm going to go over during my little portion, and any ideas you're looking at for the week ahead, you can post them in the chat. And once I go through it, Heaven, you go over a couple of your top ideas, and then we'll jump back into what everyone else is looking at. So with that, we'll get started. We have do a little brief market outlook. We can see that the SPY has been pretty much in this uptrend for the past few months now. And we can see this, pretty clear level of resistance at, 474/480 in the SPY. Like this is, our resistance area. And then we have this, higher pivot lows recently that has been acting as support. So it can get tough as this range continues to get tighter and tighter, where now we're in this 3 to 4% range, where if you're kind of buying, third or fourth day up, like over here, you're kind of, late to the move. So it can be a little bit more difficult when these ranges do get tighter, but eventually one of two things is going to happen. Either we have this breakout and we continue to drip towards 500 and higher, or it breaks, this support level and it starts to create, a much wider base versus say like 425, or even like this 440 area. But that, will come in time. Small caps still in this, huge flag. Support is still holding. The only not the best sign is, again, the 200-day that's now starting to act as resistance, where kind of this whole run up and this consolidation, the 200-day act as support. So now that it's starting to act as resistance, this could be more of like a topping pattern where it has to break down through support. But until it breaks support, this range has been here for the past year, and buying, up in it, down here near support and looking to trade it up near resistance has been the move for the past year. So you kind of want to stick with that until that changes. Going on to some individual sectors, we have energy, breaking out and finally getting above pretty much like the pandemic prior highs. I have I've gotten a couple messages about people who have energy names are looking to get out of them, but this is, kind of the time when they're just starting to wake up, and there's still a lot more for these, this sector to go before it even reclaims areas that it's been trading at in the past. It's, still nowhere near all-time highs. So if you do have some of these energy names, it is definitely extended in the short term, but it's now finally just starting to get above those prior levels. So it might be worth, being a little patient with. Healthcare, definitely, closer to the support level. We see, the 200-day has been acting as support. This range these past few months, we're looking to buy, on the way up versus these areas seems to be the better move than trying to buy, up through the perfect level of resistance. So definitely a sector to keep an eye on. Utilities still flagging out here. We were kind of expecting a little bit more of a pull-in to see, more of a focus back on those tech names. We're not really seeing that still, and these utilities are still kind of setting up here. Same thing with the industrials. Same thing, just kind of flagging at all-time highs here. Definitely not a hard level. There's still some other resistance levels, but we can see this clear, flag has been forming still above the 200-day. So it could be a little bit tighter here to look to add through industrial names up through those highs. And tech seems to be the one where it's still kind of, we're not really sure what's going to happen. Is it going to break this support level and head lower, which seems to be most of the consensus, as we're getting more DMs about trying to short names, but we start to get a lot of those messages about shorting. It's often the time to look long, where this could be more of a buying opportunity to buy up through these levels than looking to try to short through these lows when, as we've seen in the past, every time it looks absolutely horrible, like looking at it right over here, it looks, like the best short in the world, and then it holds and rockets higher. So again, I'm not saying that that's going to happen here, but we've seen this a couple of times where when it looks like it's just about to break down and everyone's looking to start shorting these names when they're the most beat up, in the past, those have been the times to start looking long and looking to buy on the way up versus trying to short into those support areas. So moving on to some names, we have this UPS again for now. Pretty much going to have to wait until after earnings. That will probably be the catalyst either to push it through this, all-time high breakout, or to kind of keep it in this wide range. So just one to keep a closer eye on in the beginning of February. Box is still surprisingly in this tight little $2 range. We can see we took a trade in this box, back in 2018, if the guys have been with us for some time, and it's still setting back up. So this one up to 27 looks pretty good. Another one is this Oracle, faded the earnings move, but it's still back in this little base that it's been, flagging out pretty much since, the beginning of summer. So looking to buy up through 90 versus 85 could be, a nice little trade, with the goal to kind of sell in this 97 to 100, 105 area. TXT, another one, just continues to kind of flag and break out. Not really any crazy amount of a breakout, just continues to kind of grind higher, but still, strong name, hasn't really gotten too beat up with the market, and could be one that we can kind of sneak in up through 78, slash 80 versus, 75. So pretty tight risk on this name that's just continues to push to new highs. And then the thing that I really wanted to emphasize was, now with all of these names getting beaten up, we don't want to be rushing into trying to buy like the low when they look like they're the most on sale. We really want to wait for those bases. And I just have three quick examples. So the first one, we have, Roku. This was more so in the beginning of the month when people were there were some people talking about trying to buy up through 220, things like that, where it's just still in this breakdown. It hasn't really started to base yet. And this is just one of those examples where, as much as, those look like great deals when they're still breaking down, the names really need to start to base out and trade sideways, in a range before they're going to really start to work, their way back towards those prior highs. So Roku is just a good example where, like, it looked like a great deal down here. Yes, it had like a few day pop, and it's faded the move, and it's now lower, and it's again still in that breakdown. Still needs to trade sideways and base out. Same thing we're kind of seeing with the Shopify. Even for myself, my first thought is, okay, if I can buy Shop down here, near 1,000, and the prior all-time highs was, near 1,700, that's a 70% range. It's a lot of room to make some money in. But same thing, it's still very clearly in this breakdown, and it needs to start to base for, we look to buy up through 1,200 or whatever the entry is. And if we even look back kind of in the past, we saw, those similar pull-ins, and it still took months and months before the name was finally ready to, have that next push. So like even, back in last February, pulled back 50%, but still based out for, nearly 4 or 5 months before it went on that run. So when we start to see a lot of these tech names that have these, what look to be these great deals, we just need to be aware that they often are that same deal for quite a bit of time. And lastly, with Netflix, it's kind of that same story where it's still very clearly in this, breakdown, and it looks like a great deal trying to like buy these lows, but in reality, it's probably going to have to base out just like it did here, for almost a year before it was able to break out. So those are the names I want to go over. And Heaven, if you want to jump in with a couple stocks you're looking at, you can do that now.
Yeah, definitely. So, I'm definitely trying to adapt to this market and the way that it's been just kind of shifting every few days. I was talking to Shake about this on Friday. I was like, the market kind of just goes up for 3 days, loses steam, comes down for 3 days. Isn't exactly a perfect math, but, really focusing on doing the opposite of what you think is right kind of has been working. So, buying when things look ugly and then selling when things start to look really good is what I really want to stick to this week. I'm really focusing on stuff that has just really good relative strength over the last few months, even if it's somewhat downtrending. Like, for example, AMD, it's still relatively strong and kind of forming this macro flag at highs. So this is one that I'm definitely watching for, eventually swinging, but for the time being, kind of just trading intraday and just looking for those quick pops off support and through certain moving averages. Another one that kind of has a similar setup is this Facebook. It got hit a little bit more back in August, but it's really starting to starting to base, kind of like you were saying, you know, that Shopify that took a huge hit. Now it's got, you know, 2-3 months of sideways consolidation. It's really digested that sell off. Obviously still really choppy, you know, there's no clear support and resistance. I mean, you can kind of see that resistance at 350, but it's still a little all over the place. So this one is another one I'm mostly just focused on trading intraday. And then eventually when it does set up with a tight flag in that 350 area, we can look to swing it up to 390 and higher if it goes higher. Apple, another one that's just, you know, still trading near all-time highs. When I see stuff like this versus, you know, a lot of other stuff in the same sectors that are down 50-60% off highs, like this is where I want my attention, you know, until until we can see some basing.
You want to take pañal off?
Okay.
Tu papi, sos hermoso. They all doing good now. He keeps him by inside, him by feeding.
Guys, please mute yourselves.
I think I had everybody muted.
There we go. Okay, perfect. So yeah, you know, keeping an eye on the relatively strong names. I don't want to get too caught up in like trying to just find a strong uptrending chart with a bull flag and have my buy stop, kind of like Shake said in the shakedown. You know, you don't want to just have your buy stop before the open and then come check it later, because you'll probably be pretty disappointed with the results. So taking it day by day, building up that watch list. We have earnings this week. A lot of big names are going to be reporting this month. So, you know, just keeping an eye on that and making that quarter 1 earnings gap up list so I can start following those and look for earnings flags.
I like it. All right, so I popped over to the chat. I don't see anyone posting ideas. So,
yeah, anyone has a game plan?
Yeah, if anyone has any ideas they want to go over, we can do that now. And then,
all right, we got Ricky's looking at LW earnings flag. So yeah, that's one that I would add to my list. Nice little change in trend, definitely. We got Juan looking at ASH, ASH.
Yeah. Yeah. So Ricky, definitely looks, you know, definitely good to have this one on the radar. You know, I don't know if you're looking at it up through 70 or through the earnings high 72, but both seem, you know, like spots where you look to add, and obviously trading it versus that, you know, earnings low. That 72 actually looks, you know, like a pretty significant level, and probably eventually works its way back up to this 86.
Yeah.
It just does have some, you know, quite a bit of resistance overhead, so it might not be the easiest earnings breakup, but definitely one that could be in play in time.
Next one is ASH, yeah, through 106, 107 area.
Let's see, that's nice little wedge forming at all-time highs. So this definitely looks, so that, like, just compared to those two, it's like the LW, like great earnings, or earnings that's setting up looks great, but has an overhead resistance that it's going to have to battle with kind of each of those figures on the way up, since it's traded there in the past, where like with this ASH, nice little wedge, and you know, you buy up through 107, you add through 110, and once you get through 110, you're into new highs. But you do have earnings in 2 weeks, so you might have to wait, and this thing probably won't really go until, I would say, the earnings has like that catalyst to push it, you know, in either direction. But definitely a great looking chart for sure.
This one, ADNT 51.
Okay. For this, I mean, I probably would just wait until this thing retests 52 or 53. Let it retest the area. Let that be resistance. Let it pull in, and then, you know, keep an eye on it a few, you know, down the line, versus right now you don't have much upside with that kind of in the way.
Yeah, looks like it could possibly form a cup and handle in time. So that's what you want to look for. Next one, AER 69. actually pretty nice.
Yeah, no, but this looks, so this is kind of like with the prior one, it hadn't retested yet. ADNT like ADNT was pretty much like right here, chart wise, and it hadn't retested. Now it's retested. It's still flagging out. You still have this like clear, let me change this line. And we have this clear, exit, verse 64. This looks much better. Like I'd be much more inclined to take this up through 69 than that ADNT.
Yeah. Next one, BKNG, 24.95.
So I would probably just wait for just 2,500. Just given how big this name is, those little, the dollar or two difference, even the spread on this name is, just this is one of the ones where it might be just easy to wait for the whole number. But yeah, this looks great. Definitely has traded here in the past. We had this, had this breakout, so you can say this is kind of like a little sneaky buyback back through that area. You're risking, $150, which sounds like a lot, but it's a $2,500 name. So it's, the risk is still very tight in this. And the one thing with these trades when we're taking these sneaky buybacks is we don't want to really put much weight into this little run up. There's going to be a few traders who bought this name and have a cost basis in this area, but it's not going to be as significant as, say, the investors who are buying BKNG for the entire year at 2,500. Like these buyers are going to be much stronger, or these sellers are going to be much stronger at 2,500 than the few people who kind of chase the year at 2,700. So if you do get this name up through 2,500, you really want to be thinking, can I hold this to 3,000? Because now this whole crowd that was holding this name for the past year is looking, they're getting more impatient, looking to get rid of it. And now you can get that much quicker or much easier kind of grind up to those newer highs. So just try to keep that thought.
Next one, we got Dell 61 versus 58.87. I'm a pretty setup.
Yeah, I mean, I think for Dell, it's a little Mickey Mouse here. I mean, again, buying, if you're going to buy anything, you're buying all-time highs, you probably will get bailed out, but there's just nothing here, and you're just,
you're buying the resistance of the ascending channel. If you zoom out, you see that it's just kind of been ascending over the last few months. So you're just buying top, and it's every time that it comes to the top of that resistance, it comes down to support. So this is the type of setup that you want to be buying off support and selling at resistance. You don't want to be buying all-time highs.
Definitely a pass on that one, Dylan. Sorry, buddy.
Yeah. Next one, box 25.5.
Yeah, so it's a little tricky because it's above that already or closed above that, so it's going to be hard to, get that price. For me, I feel like this thing is just, kind of just waiting for 27, then getting chopped up in this. Where again, it's been in this range for quite some time since June, and we sometimes discount that where it's like, all right, I'm going to get in today, and I'm going to expect this thing to go today, tomorrow, and the following. When for the last 6 or so months, it hasn't been doing that. So sometimes with these names, it's like, I know I'd rather wait for the confirmation, wait for the breakout. And if that means this doesn't go for another month or two, it doesn't matter because it's not going to go anyways. But, that's you have to just be aware of.
Mm-hmm. Next one we got, 88.5. This is a nice one.
Yes, I mean, the REITs definitely have been pretty strong. Again, they've definitely pulled back the last couple of days, but among most of the major sectors, still one that you can easily kind of buy at 12 and continue to add to, and as well as in obviously the same sector. So definitely a stronger sector. Definitely can see the 88.5. Definitely see the 90 kind of blue sky breakout. But you might, this is another one where maybe just waiting for the 90 versus getting in like $1.50 early, where for right now your real out is kind of versus 84. That might, this might just be keep an eye on it, keep the alert set, and be ready to buy the blue sky breakout on a tighter entry than getting in a little bit sooner when the risk is a little bit more than or at the moment.
We got ENV short through 74.49.
Okay. So this is kind of like one of those examples where we're getting like, it's like third day down. The same thing is like if you were to flip this upside down, and it'd be a very nice bull flag to buy through 74, but you'd be have to, give it you'd be giving it $6 room. And this is where it still might be too wide, where like if you're shorting down through 74, fourth day down, you're not, you're shorting into the extended part of the move. You're not really getting into the beginning of it. And this is kind of one of those ones where, yes, it might hit 74, but I'd be more inclined to kind of look to buy up through 76 versus 74 and trade it in this, in this range than vice versa. But again, if you can get an entry on it, it's worth a shot, but you got to just be aware that it would be fourth day.
This is a good example of what I was saying, how whatever you think you should do is probably the opposite. So this is like exactly that. It's already, like you said, 3 days down. You think it's just going to die. But the higher probability is that it's just going to either shake out that support level and then bounce, or even just bounce from right here. So you might actually want to look to buy this back up on the way up instead. Next one, CR 107.
CR 107.
That earnings soon makes it tough.
Yeah, earnings in like a week. But this could be a good opening range breakout candidate. We want to keep on the radar. Seems like the out for now is versus 100. So yeah, definitely keep on the radar. Just wait till after earnings.
Yeah, LBTYA 2855.
So again, with any of the kind of the telecom names, telecom has been probably the closer to like the weaker sectors. As again, it is starting to base out here, but you can kind of see the overall trend that it's, it had this uptrend, now it's starting to downtrend and base and kind of push lower. This LB TYA is kind of in that space. I could see like the 29 entry, but again, it's in a weaker space, weaker sector. And if you're buying it through 28, 29, you're pretty much going to be, capping your upside at this 30 half area where your risk is versus 27. So just sector wise, probably a pass. And chart wise, probably a pass.
Yeah, if you zoom out, it's down like 50% from highs that happened back in 2015. Hasn't seen those in a while. So I wouldn't expect an explosion, but it's in chart wise, like from a technical standpoint, last few months, it's pretty nice.
Yeah. It was just different sector and stuff, but
right. AEE 90.
So utilities we talked earlier that were surprisingly still pretty strong, and this is kind of going hand in hand with that. Near all-time highs, 90 is a clear resistance area, 86 is clear support above the 200-day. All looks good. It's this will be first major attempt, second attempt, third attempt. So as these attempts keep happening, you have much higher probability, and we can see that recently these buyers have maybe started up. So this, AEE looks great. Just want to be aware that this is a utilities name, so it's going to be a bit of a lower beta name. So don't expect it to break 90 and be at 96 by the end of the day. This is going to be kind of one of those ones where if it's up $1 or $2 on a day, that's going to be a big move for this type of name. But amazing, great chart.
Then we got QCOM 191.5. This is a nice one. I have this on my watch list too.
Yeah, this looks good. Great earnings flag. We got when's earnings? February 2nd. So it's
a little over 2 weeks.
Late. Yeah, it's probably I wouldn't expect much to go on with this name until earnings. So I would probably just wait until after.
Next one, we got HES 92.
And so this was, again, we're talking about the energy names before. And that, again, that's a good example of, we try to talk about rebalancing. 2020, 2021, energy was the worst performing sector. I'm sorry, 2020 energy was worst performing sector. 2021 energy was one of the best performing sectors, and that's one of those things where you have to remember that sector wise or market wise, what's most hated this year often tends to be the best performer the next year. But to buy Hess up here, you're just so late. You can't. If you're in this, keep holding it. But if you're just trying to initiate a position up here when it was at in the 70s 3 weeks ago, it's just like a recipe for losing money. So
Yep. Next one, ARIS. Volume's way too low on this one for me, but
yeah, even with these, again, I hate the recent IPOs, especially the cheaper ones. But this one, it's like just buy through 16 when it's going to go. Like that's, if it's going to have any bit of a move, it's going to be through 16, and if not, this thing will just continue to die. I know nothing about this company, so other than that, just chart wise, I would just wait till 16 or nothing.
Yeah. Next one, WSFS 56. Yeah, major level for sure.
Yeah. So definitely, so pretty close to like a blue sky area. This thing probably heads higher in time. Financials have been strong. So definitely. So you're looking at, you just do have earnings in a week or so, and that's going to be a recurring theme. But this one, same thing. Maybe wait till after earnings and take it from there.
Yeah. And then last but not least, we got Ulta 377.50.
Okay. Yeah. So this is kind of like this is a good example where like someone could potentially like, oh, I want to short like 360, and this is one of those examples where it's like I'm with you, looking to wanting to buy this up through support versus that area, and look to trade that range where this is the range his name has been in. If you can buy some up through 380, and you can look to take some profits on the way up, through 400 to 420, and keep a little bit if it ever wants to break out. But as long as you can still take some money into these moves, and if it comes back in, you can kind of reload. But this is one of those examples that I think kind of goes hand in hand with when you want to initially short, trying to buy support is probably going to be more of the move.
This is exactly what we're looking for when we're saying do the opposite of what you think is going to happen, pretty much. So that's, good job, Ronaldo, on that one. Last one, absolute last one. We have 2 minutes. NTAP 97. Yeah, there's nothing here.
Yeah, so this was what I was watching one for a bit, and I missed it as well. I think you really had to be in through 94. Now it's like you're just kind of arbitrarily buying a new high, and then you got to give it versus 90. So you're giving it, 6-7% on a random entry. Again, top right, great chart. More than likely probably drifts higher in time, but we don't want to just start blindly buying new highs versus pivots that are pretty away from our entry price just because it's near those highs.
I would say the next viable entry for that one is to watch for a retest of that 93 resistance level that it broke out of, and then look for that bounce and continuation. So then you can get a really nice low risk setup. You buy through a short-term resistance that it forms with a stop under that previous resistance turn support at 93 instead of having to hold it all the way down at 90. And then you can try to get, the continuation of this move. But I wouldn't look to buy here tomorrow or today.
Definitely agree.
And that's it. We are clear.
All right, guys. Thank you guys all for joining. Again, we have the first step of the handbook finally available on Amazon. You can download it for free on your Kindle. So if any of you guys do grab it and leave a review, I would greatly appreciate it.
Yeah.
But I think we're all done.
Yep. Thanks, guys. See ya.
See you in the chat.